A lot of retirees are excited about the new $6,000 bonus senior deduction, and yes, it helps lower your overall tax bill. But here's the catch. It doesn't stop your Social Security from being taxed in the first place. That's because Social Security taxes are based on a completely separate formula, one that the new deduction introduced by the One Big Beautiful Bill doesn't even touch. They couldn't have addressed the Social Security tax issue in this bill even if they wanted to, because it was passed through a fast-track process called budget reconciliation, and Social Security is legally excluded from that process. So even with this extra deduction, many retirees will still see up to 85% of their benefits taxed, especially if they have other income from IRA withdrawals, pensions, or taxable investments that are adding to their gross income. In fact, we ran the numbers, and a married couple with $40,000 in Social Security and $65,000 in IRA withdrawals could still owe over $4,000 in taxes just on their Social Security benefits. And the new deduction only cuts that by about $1,400 in this example. Not quite eliminated. So no, the new deduction doesn't cancel out the tax on your benefits. It's a nice break, but it's not a fix. Let's take a step back and look at what's going on here. Trump frequently campaigned on the idea of eliminating taxes on Social Security benefits because ever since 1993, up to 85% of your benefits can be taxed if you make more than $44,000 in provisional income. I'm going to do a deep dive on that calculation in a second and how the new bill doesn't touch that calculation. But these thresholds haven't been touched since they were implemented in 1983. This new bonus deduction for seniors, which is $6,000 per taxpayer over 65 years of age, is widely advertised as being the solution to the problem. In fact, there were statements released from both the Social Security Administration and the White House that stated the vast majority of seniors would not pay taxes on Social Security benefits because of this bill. Now, most professions don't allow you to make statements that are categorically incorrect, but maybe politics is one of them. This bill's relationship to Social Security is kind of like the kid in the group project who didn't do any of the work, but still wants credit for the A. The calculation of how Social Security is taxed, which is called provisional income, starts with your gross income, excluding Social Security, plus tax-exempt interest, and half of your Social Security benefits. And these brackets show how you determine what percent of your benefit is going to be taxed based on your provisional income. Now, what is missing from that calculation? You guessed it, deductions. Those are found in a different calculation used to calculate your taxable income. That calculation uses your adjusted gross income, which includes only the calculated taxable portion of your Social Security, minus your deductions, equals your taxable income. And that is where the new bonus senior deduction is applied. So there is no direct effect on the taxability of your Social Security benefits. To give you another example, if your AGI in retirement is $120,000 and $75,000 of that is your taxable portion of your Social Security benefits, while your taxable income might get an additional $6,000 or $12,000 deduction if you're married and you're both over the age of 65, the taxable portion of your Social Security benefits is still $75,000. Now, is there hope? Not really, or at least not yet. There have been a number of pieces of legislation introduced over the years, but they are either dead in the water or they're incomplete, meaning that nobody has made a recommendation as to how to fund these new pieces of legislation. Now, one of the most talked about Social Security reform bills is the Social Security Expansion Act, and it's gained attention because it would increase benefits and eliminate taxes on Social Security for lower and middle income retirees. But here's the reality. It would need 60 votes in the Senate and support from both parties, and that's just not where Congress is right now. So while it's on the radar, it's not likely to pass in the current session. My name is Zach Morris, and I'm the founder of Paces Ferry Wealth Advisors. If you've enjoyed this video, please go ahead and hit the like and subscribe button. And thank you for watching today.